Good afternoon, everyone. This is Henry, and as we get into the weekend review, I wanted to share a few setups that I'm seeing that may come through under the strength of the dollar, which is to say that the rising currency puts pressure on so many other asset classes. And I wanted to look at a few of those with you in tonight's review, but also wanted to offer what I believe is so helpful in trend-based analysis. Because to use something like a trend line and to say, low to low and extend it out, well, you could draw a trend line there. You could draw a trend line here, which I guess actually works relatively well. Maybe there's a more extreme one through here. It can be kind of subjective. So I like to take the approach instead that says, I want to compare this product and its current correction to corrections it's gone through before. So you can see by coming in and measuring these, right, we can activate the extension and you can see that the previous swing high to swing low had a very clean relationship to this correction. So it says you're correcting just like you've corrected before, and then went on with a very powerful trend-based move. So I think more of that is probably in store for the dollar. It's closing up there near the upper part of the range this week, also helps that argument. And then moving over into some of these asset classes that I believe may see continued weakness into November. So as you think about the potential of maybe having some options exposure, maybe you look at the GLD puts out there in the November expiration. Again, the strength of the dollar begins the conversation. Then you see this daily squeeze and a target down here at, let's call it 15.15. I believe that that's a pattern worth following. And if you don't necessarily want to just rely on that, also look at some interesting data here, where if you look at the history of the ETF, notice here again pulling GLD, the percentage of months where it closed higher than it opened, and this is referencing 10 years worth of data. Look at the stats for November, right? So it's only up about 1 out of 5 times, and on average it's losing 3%. So between that decade of historical data, the daily squeeze, the fire line down here below, I believe that's headed for lower prices. And then also want to compare that against Bitcoin, where the squeeze has been in play for so long now, but another product that just continues to deteriorate in a pattern of lower lows and lower highs. I think that's going to be sub 1300, if not by the end of the year, maybe sometime into 2023. And then maybe to a slightly lesser degree, but more of the same thinking in crude, and wanted to give you this 89.69 as resistance to carry forward into next week, possibly targeting the lower end of the range. But again, I hope it's a helpful review. Currency impacts are felt wide across the market, and these are the spots that I think we'll see them move next. So you guys have a great weekend, and we will see you in the next video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.